The U.S. housing market in 2025 remains one of the most frustrating puzzles for millions of Americans. Even after years of rising interest rates, cooling sales, and more homes hitting the market, prices are still stubbornly high. Many expected that by now, with inflation slowing and the economy stabilizing, home prices would finally drop enough for first-time buyers to get a break. But that hasn't happened. Instead, prices have barely budged, or, in some areas, have even continued to climb. Right now, the national median home price sits around $416,900, and the typical currently sold home is about $435,495. That means the dream of owning a home is still out of reach for many working families. The first major reason is supply, or rather, the lack of it. The United States simply doesn't have enough homes. Experts estimate the country is short millions of housing units. Building new homes has been a slow and expensive process. Land costs are high, labor shortages are ongoing, and construction materials haven't gotten much cheaper since the pandemic. Even though demand has cooled a bit, the number of available homes for sale remains historically low. Builders are cautious too. After being burned during the 2008 crash, many are building fewer homes and focusing more on higher-end properties where profit margins are better. That means fewer affordable starter homes are entering the market, leaving first-time buyers competing for the same limited supply. Another major reason prices are still so high is what economists call the lock-in effect. Millions of homeowners refinanced their mortgages during the pandemic when interest rates dropped to historic lows, sometimes as low as 2% or 3%. Now, with rates around 6% or more and typical 30-year fixed rates averaging close to 6.7% or so, those homeowners simply don't want to move. If you already have a cheap mortgage and you sell your home, you'll likely have to buy at today's much higher rate. Even if you downsize, your monthly payment could still be more. So instead of selling, people stay put. This freezes up inventory and keeps prices elevated because fewer homes are being listed for sale. There's also the issue of institutional investors. Over the last few years, large investment companies and private equity funds have bought thousands of single-family homes across the country, especially in rapidly growing areas. Their strategy is simple: buy homes, rent them out, and hold them long-term as assets. These companies can pay in cash, outbidding regular families who rely on mortgages. This competition drives up prices even further. In some metro areas, investors now own a significant share of available homes. This shift toward corporate ownership makes it even harder for individuals to compete in an already tight market. At the same time, demand hasn't disappeared. It's just evolved. Millennials, now in their late 20s to early 40s, are the largest home-buying generation in U.S. history. Many delayed home ownership during the 2010s, but they're now entering their peak buying years, often with families and stable jobs. Even Gen Z is starting to enter the market, especially in smaller cities where remote work makes relocation easier. So even as affordability worsens, the number of people who want to buy keeps rising. Then there's the geographical factor. People are moving away from expensive coastal cities toward cheaper inland regions, but those areas weren't built to handle massive population growth. Cities like Austin, Nashville, Tampa, Boise saw huge inflows of new residents during the pandemic, pushing local prices up dramatically. While some of those markets have cooled slightly, the long-term effect remains. Home prices there are still far higher than they were before 2020. And as more people relocate for affordability, they themselves drive the price increases in their new cities too. Inflation and construction costs also play a role. Building materials like lumber, concrete, and steel have remained expensive and volatile. Even though prices aren't as wild as during the height of the pandemic, they're still higher than pre-2020 levels. Labor shortages in construction add to the problem, as builders have to pay more to attract workers. Every new home costs more to build, and those costs are passed to buyers. On top of that, local regulations and zoning laws in many cities make it difficult to build multifamily housing or new developments quickly, limiting the supply growth. Another reason home prices aren't falling much is because of how the market psychology works. Homeowners see real estate as one of the safest assets in America. Even when sales slow down, most sellers prefer to wait rather than slash their prices. They believe the market will rebound, as it always has. That collective mindset prevents big price drops, keeping the market inflated even when demand weakens. Rising mortgage rates were supposed to cool the market. And they have, to an extent. But they've also made monthly payments skyrocket. A median-priced home in 2025 costs roughly 30 to 40% more per month than it did just a few years ago, even if the purchase price hasn't changed much. This paradox means fewer people can afford to buy, yet prices remain high because sellers won't lower them enough. It's a stalemate. Buyers can't pay more, sellers won't accept less. Meanwhile, rents remain expensive. Even though rent growth has slowed, the average rent in major metro areas is still somewhere around $1,179 per month or more. High rent makes it harder for people to save for a down payment, trapping many in the rental cycle. Ironically, that keeps demand for rentals strong, giving landlords little reason to lower prices, further delaying the path to home ownership for many Americans. So what could change this? Economists say that a meaningful drop in prices would require a combination of lower mortgage rates, higher construction rates, and a significant increase in housing supply. But none of those are happening quickly. Lower rates could revive demand again, pushing prices back up. More construction could help, but that takes time. And many builders are focusing on large multifamily projects instead of affordable single-family homes. Looking at the broader picture, home ownership in America has become more of a privilege than a standard goal. The average income needed to afford a typical home in 2025 has risen to maybe $120,000 or more per year in many markets, nearly double what the average U.S. household earns, widening the affordability gap. The median home price today is about 5 times the average annual household income, compared with around 3.5 times income in the mid-1980s. That gap shows how out of balance the housing market has become. It's not just about location or timing anymore. It's about systemic issues that have built up over decades, from underbuilding after the 2008 crash, to restrictive zoning, to speculative buying. In the end, the reason U.S. housing prices are still so damn high in 2025 isn't one single factor. It's a mix of too little supply, too much locked-in ownership, expensive building costs, corporate investors, and long-term demographic pressure. It's a complex web that keeps housing expensive even when logic says it should fall. The American dream of owning a home is still alive, but for many, it feels further away than ever. Until the country finds a way to build more affordable homes faster, loosen zoning restrictions, and create incentives for first-time buyers, prices will likely stay elevated, no matter what the economy does. Hit the like button and subscribe to this channel for more amazing information. See you guys in the next video.